Have you ever wondered how people make money just by buying stocks? Or why do people always talk about Apple, Tesla, or Amazon stocks like it's part of a daily routine? We keep hearing things like the stock market is up or buy the dip, but what really is a stock market and how do people like you and me buy pieces of those big companies? If you've been confused by all this stock market talk, don't worry, this video is made just for you. We'll be breaking everything down in very simple and easy to understand words with no fancy jargon, just clear answers. So that by the end of this video, you'll know exactly what a stock market is, why companies sell stocks, and how can you buy stocks as a beginner in 2025, and what things you should keep in mind before starting. So without further ado, let's start this video right away. Imagine you walk into a giant supermarket, but instead of vegetables or snacks, the market is filled with companies. Every company has its own aisle, and on each aisle, you can buy small pieces of big companies. Those small pieces are called stocks or shares. And stock market is simply a place where people buy or sell those stocks. Now when you hear the stock market, you might think of a big building with a bunch of people shouting or waving papers, right? Well, that's how it used to be, but now everything is done online. If you want to buy shares or stocks, you can do so from anywhere around the world. Let's say you have to buy one share of, let's say, Coca-Cola. It means you become a small owner of that company. So yes, even normal and ordinary people like you and me can be small owners or part owners of big companies like Tesla, Microsoft, Apple, and whatnot. You might be wondering, why would a company sell a piece of itself to strangers? Here's the deal. Let's say a company wants to grow. So it will need more money to create new products, expand to other countries, or build more factories, right? So instead of taking a loan, it can raise money by selling shares to the public. This process is called an IPO or initial public offering. Once a company gets listed on the stock market, people like you and me can buy its shares. So in return, the company gets money to grow, and we get a chance to earn profits when the company grows in value. It's a win-win situation for both, but only if a company does well. This is the part most beginners are curious about. Buying a stock isn't as hard as it sounds. You don't need to be rich, and you don't need to be a finance expert. Here's how it works. First, you need to open an account with something called a brokerage. Think of a brokerage as the online app or platform that connects you to the stock market. Some popular online brokers around the world include Robinhood, E-Trade, Fidelity, Webull, Interactive Brokers, or local options depending on your country. You sign up, add your personal details, connect your bank, and deposit some money. Once your account is set up, you can type the name or symbol of the company you want to invest in, for example, AAPL for Apple, and then hit buy. And that's it. Congratulations, you're a shareholder. Now that you own a stock, what do you get? Well, when you buy a stock, you hope that the company does well in the future. And if it does, the price of the stock may go up, which means that you can sell it later for a higher price and make profit. For example, let's say you buy a share of Netflix for $100, but later the price goes up to $150. So you just made a $50 profit. Easy. Also, some companies reward their shareholders by giving a part of their profits every few months, which is called a dividend. So you not just earn from selling the stock, but also from regular income. But remember, if a company does not do well, the stock price may go down. So there's always risk involved. That's why you need to understand to not invest blindly. You don't need thousands of dollars to begin. Many apps today let you buy fractional shares, which means you can buy a $10 or $20 worth of a share instead of buying a full stock. For example, let's say if a share of Amazon costs $3,000, we're just assuming it for now, and you only have $30. So you can still buy 1% of that share and earn returns on it based on the portion you own. So yes, even students or someone with a small budget can start investing too. Even though buying stocks is easy, smart investing takes some thinking. Here are a few simple rules to follow. Don't invest all your money in one company. Spread your money across different stocks, which is called diversification. Invest for the long term. Stock prices move up and down daily, but over time, good companies grow. Don't follow the crowd blindly. Just because everyone is buying a stock doesn't mean you should too. Learn first, invest later. There are tons of free videos and books on how to pick good stocks. Take time to understand the basic and then make an informed decision. So now you know stock market is a place where people buy small pieces of big companies. It's not as complex or mysterious as it may sound. If you've ever dreamed of being part of a big company's success story, this is how you do it. Start small, learn slowly, and invest wisely. So this is all from my side. I hope you found this video helpful, and if you do, make sure to like and subscribe to my channel for daily financial insights and also for the information you may need along the way. Also comment down below which stock or share would you want to own one day.